Hi, this is Zach May with the US Chartbreakers here at Zach's Traders Cafe for Sunday, the 9th of February. Starting off with the S&P, which is looking like a little bit of a rising wedge situation, so a negative. We've got a line of resistance there from the end of last month. That's running through 60.80, so we need an end-of-day close above that to give us a move up to the top of the wedge there, 62.75, presumably by the end of next month. On the downside, the key issue is holding that uptrend line there from back in August, around 59.10. Below 59.10, well, obviously we've got that low that we had in the middle of last month towards 57.80, but hopefully at this stage we just remain above or remain within that rising wedge, especially given the way that the deep-seek rug pull still managed to keep this market within its upwardly mobile direction. Speaking of that, we've got the Nasdaq, and here a similar picture in terms of near-term resistance. So, but in this case, this is from December, 21,800. Below that, there's a risk of the test of the floor of the rising trend channel there from May last year, and the 50-day line there towards 21,400. But at least while we're above that, we've got the prospect of a break of the December line and a move towards the top of the rising trend channel, as high as 24,000 over the next couple of months. On the downside, and probably more comfortable for most, would be a test of the November support area, 20,300, before assuming that we are back in business on the long side again, especially as that area was the old July resistance before old resistance becoming new support. Moving on to the stocks and starting off with the firm, which has delivered its second major gap to the upside in recent months. The first one at the beginning of September, the second one now, and above the resistance on the way down from the beginning of January at $68. We're looking for a journey to the top of the rising trend channel from last spring up to as high as $84 by the end of this month. Nice bounce off the RSI 50 area out of the gap higher, which was a leading indicator on the upside. On to an old friend of ours, Big Bear AI, and you can see that since the last time we looked at it, we've had a wonderful saucer turnaround, gapping down back in March last year and then gapping up now, and the view is that we're in a rising trend channel. We've been in this since back in March last year, top of the channel there around $11.30. That's our destination for the shares while we remain above the recent trading area between, either side of the $7 level. Obviously on Friday we were a bit lower than that with the key reversal to the upside. Ideally we'd stay above Thursday's resistance around $7.80 ahead of a move to $11 plus. Next up is Cloudflare, and here another U-shaped or saucer-shaped turnaround, another gap to the upside, and looking for the shares to hit towards $200, at least while we're above the Friday intraday low around $152. Now, obviously, we'll have to see whether support comes in at and above the top of that gap. Moving along to Centris, and here we've had a gap to the upside after a gap to the downside. So it's a bear trap island reversal, and that tends to be or can be one of the strongest parts, some strongest setups that you can have above $100, which was basically the recent resistance on the way down. Looking for as high as $140 by the end of next month. So that's a nice little challenge for the shares. Back, by the way, we've had a triple rebound for the RSI at neutral 50 over the past couple of weeks. Moving along to Doximity, and another gap higher situation. This one, obviously, we've had many for the over the last year. Current situation is that we're hoping that we'll be able to stay above the floor of the latest gap around 71.80 or 71.50 rather. Maybe asking a bit too much, but at least while we're above that, up to as high as $98 on the top of that rising trend channel from this time last year. If we do break back below the 71.50 level, then we'll just be waiting for an end of day close back above it to give us the starting gun on a potential new move to the upside. Next up is stock you'd think that will do well in the current environment, with gold going through the roof. Rising trend channel there from May last year, top of the channel there towards $4. And we're looking for that while there's no end of day close back below the latest gap high at 285. The previous resistance near 280, so you can judge your risk management according to that little band of trading. Moving on to a situation which hopefully will deliver over the near term. A straightforward trend line break there from back in November. That's versus around the $2.10 level. Above that, we're looking for the top of the range and the top of the rising trend channel there from late September, as high as $3.60 by the end of next month. Another stock which we used to look at when I was covering US stocks on a more regular basis, and that's Lightbridge. Here you can see that we've got this V-shaped rebound, top of the channel there, heading towards $18.20. We're looking for that by the end of next month, while we remain above the January resistance zone, just above the $10 level. Let's call it $10.40. A stock which has really got a good-looking chart at the moment is Mangoceuticals, and here you can see the saucer-shaped turnaround and then the gap to the upside. And here you can see that looks as though we're going to have a repeat of we've had a repeat of the spike that we had back in October, but this is a rather stronger one. And looking for the shares to hit the top of that rising trend channel base from back in August, as high as $6 by the end of next month, while there's no end-of-day close back below the low of Friday. $3.60 should do it. After the rug pull in Nvidia, we've seen the shares trying to regroup. They've regrouped off the floor of a falling trend channel, which has been in place since back in September. Bear trap rebound from below $116. End of day close on Friday above the top of the gap there, which was a healthy sign, $128. And above that, we're looking for the shares to fill the gap up to $142, even if they then fail again at the top of that falling trend channel. On to the last two. First one is Pinterest, and here we've got a massive bear trap iron reversal and gaps all over the place, but the latest one on the upside, and looking for the shares to retain support at and above the $37 area, which was the second gap or third gap on the downside that we had back in the summer. But the key here is holding above 37 to manage to get to as high as $50 by the end of next month at the top of that rising trend channel from the spring of last year. Viasat is the stock that finishes the sequence, and here we've got had a gap to the upside and then bounced off a rising 50-day line and the 50 RSI level as well, above the 50-day line there at $9.37, looking for the top of the rising trend channel base at $17 by the end of next month or even sooner. That's it for me today. More updates during the week.